Today, I'm speaking with Jeff Killeen from PDAC. How are you today, Jeff?
Very well, Tracy. Nice to see you once again.
I love getting updates from you. Can you tell us how PDAC may be impacted with what's going on with Trump's tariffs in Canada?
That's a really interesting question. It's going to be a challenging one to answer, or at least for the next few days until we see a bit more specificity on what might be aimed towards Canada and towards the Canadian industries. I think, put it simply, though, the prospect of major tariffs, 25% tariffs or whatever they may be, it's going to have a major impact on the industry, on the mineral exploration, on the mining industry, without question. Again, not a lot of specifics at this point in time to be able to comment on directly, but you can think of simple things like the cost of steel. So does that impact a junior explorco that's drilling in a remote terrain where, drill steel is a big part of what the inputs are? Or is it going to have a major impact on a company looking at developing a new mine and the capital costs for development of that mine? It's most certainly going to. Then you just think about the raw materials that are used on a daily basis in mining and extraction exploration. There's no question that the prospect of major tariffs would have a huge impact on the industry from a cost perspective, a cost in perspective. And no doubt that's going to have an implication for the value of dollars raised by companies in the marketplace and what their capabilities are, what their flexibility is like, and what their strategic decision might be, strategic decision making might be in the next year or so. So we're patient and anxiously waiting to see more details on what these proposed tariffs might look like. And we'll do the best we can to try and respond with thought-based, evidence-based solutions for our own government once they're back in their seats.
I think you eloquently summed it up that basically it sparked debate, and we're all awaiting to see how this is going to impact us. Speaking of impact, what about the policy and the priorities for PDAC 2025? Perhaps you can hit some of the highlights for us.
Sure. There's a few ways to look at this. So the convention, our number one priority is to be able to convene the world, to bring as many folks from around the mineral industry, mineral exploration developers, and miners from around the world to one place. Because no question, that's what we've offered for 93 years. This will be our 93rd iteration, effectively, except for one, at the same pace in the calendar in the first week of March. And so that consistency is a big part of what we offer. That breadth of opportunities is a big part of what we offer, and the networking connections that can take place there is why people come year over year. So we're excited to just be able to open up the doors and bring the world back in again for PDAC 2025. In terms of the priorities we have for the convention, it's to put the best quality material onto the stage. So we often get asked, do you have a theme for this year's convention, or are there themes around the convention? And we don't try and construct it from a single theme, because we like to say, well, we cover the whole palette of colors when it comes to the issues that are in and around the mineral industry. So we have lots of programming in the technical realm, deep dives into geochemistry and geophysics and deposit formation. We have lots of policy things that are more in my domain on offer through the sustainability, the capital markets, and Indigenous affairs programs. There's keynotes that are major leaders in the industry that are giving their thoughts and perspectives for what happened in 2024, what their strategies might look like for the next 5 or 10 years. So just being able to open the doors and bring everybody in and offer basically everything one might look for in the industry, that's our number one priority from the convention standpoint. If we pivot, though, and look at just the policy perspectives and some of the priorities we have there, I'd like to suggest I've been going around the country the last number of months and trying to tell a story. It is a nonfiction story, and it's really focused on the capital marketplace. And as I put it out there, it's the good, the bad, and the ugly. A bit of thievery there in terms of how we try and lay that out. But I think it's an important story to be telling. So when I think about what is the good, well, if we look at 2024 in a bit of a nutshell from the equity market perspective, it looked pretty good from the highest level. The mineral industry raised in Canadian dollar terms about $10 billion through the TSX, the Venture Exchange, the Canadian Securities Exchange, and that's a healthy number. And year over year, that's an increase of over, I think, almost $2 billion year over year. So that's a good sign. Then if you look at the Canadian marketplace relative to Australia or everywhere else in the world, we went up while everybody else went down. So the proportion of money generated through the Canadian marketplace for the mineral industry went up to about 35% last year. You know, 1/3 of every dollar somewhere in the world that was invested in an industry came through our marketplace. So that's a good signal. But then you have to strip away some of that top level number and think about what does it look like underneath, as we often do in the mining industry, mineral industry. And that's where you start to see some of the more negative or bad signs, if you will. And you think about that number, 10 billion. So good on the headline, but then you give some perspective of, well, nearly 1/3 of that came from just a handful of deals. You know, about 4 deals collectively, you could put a ring around about $3 billion. So you start to back that out, and then you think, well, what's left for the rest of the group? Then you can also look at, and the team that works with me does a fantastic job at trying to pull these pieces apart. You look at what was remaining, and about 80% of all the financing that came through the marketplace went to the top 50 deals. So then you reflect on the fact that, well, we are the largest component of the Canadian marketplace in terms of the mineral sector, in terms of public issuers, whether it be on again, the TSX, the Venture, the Canadian Securities Exchange. Those companies total about over 1,100, you know, somewhere in the neighborhood of 1,300 companies. So if you think of, well, the majority of the financing, about 80% went to only 50 deals, that means what penetrated down into the lower end of the market, you start to think about some very small numbers. And then you think about all of the things that we're trying to accomplish in Canada, from developing a new critical mineral strategy, trying to establish new supply chains for Canada, for our allied partners and the rest of the world. And you can appreciate, well, you know, there's not necessarily as good a story as we think of from that headline number. So that's a bit of the bad. You can also say, look at the proportion of what's generated from the main TSX versus the CSE or the Venture Exchange. And we've seen the proportion of those smaller exchanges go down for almost 3 or 4 years running now. So those are some negative signs for sure. And then let's get to the ugly. I think the one of the most concerning charts that I've used, numbers that we speak to, is just how much money is being generated by the Canadian marketplace overall, outside of the mineral sector. So again, kind of reflecting on the good, half of every dollar raised in Canada last year came to the mineral industry. 50% of all the equity generated through the marketplace came to a mineral explorer co or a mining company, somebody in that sector. But that's not necessarily a good thing. Overall, Canada, the TSX and Venture combined only generated about $20 billion. That's the lowest I've ever seen in my entire time looking at the marketplace in my career in this industry. And that's down several years in a row now. If you think back to the global financial crisis in 2008, 2009, I think we generated over 65 billion dollars in the Canadian marketplace. If you think of COVID and the impacts in 2019, it was over 30 or 40 billion dollars. So, you know, we are at a low point in terms of attractiveness as an overall marketplace. We're at a low point in terms of equity investment from whether domestic sources or foreign sources coming into the market. And that's a very concerning measure when you think about what we're trying to accomplish as an industry and what the attractiveness of Canada looks like overall. So I know that was a bit of a long-winded scenario, but it does point a direction for what are we trying to do at PDAC to solve some of this problem. One of the major things you often hear us talking about is flow through shares, or the mineral exploration tax credit, or the critical mineral exploration tax credit. And why do we talk about it so much? Well, they are incentives that help to usher in investment, equity investment into the marketplace, into our sector. And it often is one of the, you know, those are the key pieces that help incentivize investors to look at a relatively risky part of the marketplace. I mean, mineral exploration, we've talked about this before, it's challenging. The prospect for success is low. The likelihood you're going to see value creation translate into market value very quickly isn't always there. So those incentives are key to keep our marketplace churning and keep our members having that access point to the market. The METC is going to expire at the end of March. Unfortunately, we did all the work we could. We got support from our members, and thanks to them, we got support from the provinces and territories, their governments voicing concerns last year. And fortunately, with that, we had the METC renewed, but it was only for 12 months. The federal government made that decision. And now we're in a point where, you know, the federal government's not sitting in Parliament. There's no ability to move legislation forward. And so the METC, expiring at the end of March 31st, how can it even be renewed at this point? We're really concerned about that prospect. So we're doing our best in this interim period, reaching out to current members of Parliament, to current ministers, to the CRA and trying to understand what are the possibilities for the METC to be renewed outside of a typical legislative process. And hopefully we get some sort of positive light at the end of the tunnel in that scenario in the next number of weeks. But there's a real concerning prospect that it could expire, at least in an interim basis, until government gets back to normal business and starts thinking about legislative processes again. So that's front and center number one issue for us from a policy perspective, is finding a way for the METC to be renewed. But not just for 1 year like it was last year, even as we've asked before, not even for 5 years. We're in this situation because of that such short renewal. So we want to see it permanently installed, something that can be a tried and tested, attractive incentive piece for the marketplace for years to come.
An amazing summary you just provided our listeners. And I really do encourage everybody to try and understand all of the updates you just gave everybody, specifically having to do with the critical minerals flow through, or the critical minerals charity flow through, and or structured flow through, depending how you call it. A lot of people out there still don't know how to take advantage of the charity flow through model. And of course, you were talking about the renewal. How can we support you, Jeff, and PDAC in getting this renewed? We were part of the process last year. We did our small bit that we could. How is there a booth that we can all line up at and sign petitions, or tell us more?
We will have a lot of different things over the next month or so that people can also share in the public domain. You pointed out, sending messages to your local member of parliament is certainly a way to make sure that this issue is brought forward from both the regional basis and from the more center in Ottawa. So look out for correspondence in that regard over the coming weeks as well. You mentioned charity flow through, and it is a more intricate part of how capital moves into the mineral exploration space, and it has been a real key source of investment over the last number of years, which is great. But at the same time, we do see a risk with that being one of the primary sources or sole sources of investment for Canadian exploration in particular. And so that leads back to a few of the other priorities that we have in our minds, some changes we'd like to see from the flow-through regime itself to hopefully broaden out that investor base, to make it more attractive for you and I and the average person in Canada to be able to access that flow-through regime and make it a viable prospect for investment. So right now, taxes, the Income Tax Act, it treats a flow-through share when you buy it as being bought at a zero cost base. So if you're paying capital gains, you're paying capital gains no matter what happens to that stock. So let's say I buy a share for $1 a share. That share price goes down to 80 cents over time. I choose to sell that. I still have to pay capital gains on it. So the charity flow through market has been an effective way to maintain investment through flow through shares, but it's largely for those folks that are of the higher net worth ilk and folks that are looking at it explicitly from a tax planning purposes. For tax planning purposes, not necessarily just for the general investor hoping to find some wins out there. So we think a shift by if the Tax Act was shifted to actually assess capital gains based on a purchase price, it would make it a lot more appealing for a much broader suite of Canadians. And you could actually see a reinvigoration of the general investor looking at flow through shares as a more viable piece of their portfolio. So that's one critical change. We also see a bunch of dynamics in mineral production, the discovery rate of reserves, the increase in resources and reserves generally as another litmus test that's not necessarily pointing in the right direction. I've been saying this to lots of folks. If you look at copper production, it's down almost 30% in the last 7 or 8, 10 years. Nickel production, zinc production, these are heading in the same direction. So how do we change that course? Well, we see a lot of projects that are started up, reaching a certain stage, but then they may stall. And part of that is flow through shares. When you raise money through flow through, a company out there doing that exploration work, they can't use that money for assessment work or scoping work, trying to get a feasibility study done to a point where they can say, yes, this is viable. Yes, let's build this and let's move forward. So we'd love to see that eligibility expand, basically closing the gap between the eligible criteria for flow through. So you can do that kind of work. And I think you would end up seeing a lot of new reserves penciled into the books. And, you very much could see new mines coming on as a result of that. So that's another change that we would like to see. There are also, though, some fixes if we look back into 2024 that just never made it through because of what happened in Parliament through the fall and with prorogation here in the early part of the winter. There was some key pieces that haven't really come true yet. There was a clean technology manufacturing investment tax credit. Sorry for that quick blurb, but it was launched as a part of Budget 2024, but it was put in place in a way that it's basically ineffective for Canada. There's a threshold of 90% critical minerals required from a mining deposit in order for it to be able to apply for this credit. That just doesn't work from the reality of how deposits are created, what's in the ground, and what actually gets mined. So there was an amendment proposed to that credit that would have made it much more effective. That amendment died on the order papers as Parliament did what it did over the last number of months. So we want to see that amendment reintroduced as soon as possible so that that tax credit is actually applicable to Canadian assets, Canadian deposits, Canadian mines, because it could be a huge win for somebody looking to develop a new copper project or zinc project in Canada, and is a critical piece of what we want to see done.
So in addition to spearheading these flow-through opportunities for attracting more capital to the exploration arena, PDAC does an amazing job of integrating all kinds of creative ways for capital to be raised. For instance, attracting governments with new, expansive, multi-billion-dollar, like the UK government, into critical minerals are all attending PDAC. Can you tell us a little bit about the highlights about, because I mean, you get international government leaders from absolutely everywhere. Can you offer us some highlights?
Certainly, looking at last year, it's a good barometer, I would like to say, for what's coming in March of this year. I think we had over 130 countries, pardon me, represented within the convention, both attendees and officials. And kind of to sum of what I said right up at the top, we are the world's largest place for interaction. And so that's why people feel and fortunately benefit from coming to the convention, why they need to be there. So just the fact that you can access virtually every corner of industry, that's a big part of why you see so much participation from foreign nations. We also have a number of hallmarks within the program, though, that add that attractiveness. We host an International Mines Ministers Summit every year. Last year, we had a few dozen ministers from around the world sitting at a table together, discussing policy issues and some of the impediments that we face with building up the critical mineral sphere, or just generally making sure that industry is strong. So it's that's the kind of piece where a foreign nation, a foreign dignitary, leaders from around the world will look at and say, well, if I'm not at that table, I'm missing out. So it makes it a key part of why people want to come to Toronto each and every March. Outside of that, again, I think just what is being said on the stages. You've got leaders in industry for some of the world's largest mineral exploration and mining companies sharing their thoughts and perspectives and putting the real truth out to that audience. And so just being in attendance and being able to understand what those priorities are is very valuable for governments and for people from countries all around the world. So I'd like to say that it's almost hard to pick one thing because there is so much on offer, but there's very few times or places anywhere in any industry where you can walk into one place and be able to access anything you need. The B2B, the business to business collaboration, the B2G, the business to government collaboration, there's pieces within the convention that really hyperdrive those. There's one-on-one meeting slates that companies can participate in. There's lots of sequestered or open meeting rooms, rather, that you have governments and countries showing their opportunities out to the industry as well. So, I mean, there's just that the amount of touch points are almost infinite when you think about what happens over those 3.5, 4 days.
Well, I'm certain, Jeff, that anyone watching this interview will be, if they haven't already registered, will be registering right after. Just go to the link being featured on the screen as we speak. And Jeff, thank you for your time. We look forward to seeing you at PDAC.
Thanks very much, Tracy. Always nice to be here.